So Zuma operated a defined benefit plan for 48 employees at what? At April 2015. The fair value of the pension plan asset was what? 8,200, 8.2. And the present value of pension plan liability was 8.5. How do you understand this? What does this mean?
But these are the opening.
It means what?
The opening balance.
Oh, absolutely. For the two plans, right? Okay. Now, the actuarial estimated that the service cost for the year to 31st March was what? Was 2.1, right?
Giving you liability component.
Absolutely.
It's a liability component.
Now, the pension plan paid 500,000 to retire members, and Zuma.
So we are settling. The pension plan paid.
Yes.
So go on.
Okay, so this is what. So this is what. This is what benefit paid, right?
The pension, yes, benefit.
Okay, and for Zuma Limited paid
both liability and assets.
Absolutely, and Zuma paid 1.9 in contribution to the pension plan in the year 2016. So this is also what pension contribution, right? The actuarial estimated that the relevant discount rate is what? Is 6%. Okay, Zuma Limited announced improvement to the benefit offered by the pension plan to all of its members. The actuary estimated that the past service costs associated with these improvement was what? Was 2 million. Have you understood this?
Yeah, that's the change.
There is improvement in what? To the benefit to be paid to the author. So I told you when there's an amendment in the what? In the contribution.
Yeah, that's it.
That's where you have what? Your past service cost. Do you understand? Okay, so there was an improvement of what? 2 million. Are you with me? So at 31st March, the fair value of pension plan asset was what? Was 10 million. That's the closing balance. Is that not the case? And then the pension liability was also what? 12.5, which is what? Also liability. And in the they said including the past service cost. This thing that they brought here is just what? It's just to spin your head. If you are not careful, you will go and remove the past service cost 2 million from
it.
You are wrong. Do you understand?
Okay.
You are wrong. When you do that, you are wrong. Because wrong. I've already explained this to you. So let us come here and solve it. So they tell you should calculate all that you have to calculate. Pension asset and pension liability. Now, the reason why I'm saying that, I've already told you that the pension asset, the pension liability, example, the pension liability, I told you that they are what? They are prepared by what? By the actuarial. It's like you are doing what? You are budgeting. And there is what? There is actuals. You understand? So the pension liability that you see what? Past service cost of what? The closing balance of past service cost what? 12.5 million. And they say it is included what? It's including what? What do you call it? Past service cost of what? 2 million. It's supposed to be. And here the actual here means that indeed there's what? There is 2 million what? Actuals of past service cost of what? 2 million. It's here. So if it is also part of what? Of the budget. What is wrong with that? Are you with me? If it is part of what? Estimation and in actual, it actually manifested that. There's nothing wrong with it. So why should you go and remove it from what? From the closing? Because the actuarial envisaged that the past service cost of 2 million or the improvement in their what? In their service cost will be 2 million plus. And it is part of what? The closing balance liability. In actual, it manifested that. Why should you go and remove it? You will be wrong there. So you will leave it there. Okay, so let's come here. What is the name of the company, please?
Zuma.
Zuma Limited. So you underline. Then you have your what? Your pension asset. Then you have your what? Your pension what? Liability. Please give me the values. Opening balances. The opening balance asset is what? 8.2, right? Okay, so you come here. Balance brought down is 8,200. Then you come here. Balance brought down is how much with this one? 8.5. So 8,500 here. Okay. Now let's look at what? Returns from investment. It's how much? How much did they say? 6%.
6%.
So 6%
6%.
on this one
Yes,
will
sir.
give you what? So here also what? Interest expense. That one too is 6%. What do you have?
492.
492. Okay. You add it. Okay.
500. Liability is 510.
510. Okay, so we are done. Now let us go
Yes.
into it. What items can we see in the question? We have what? They said what? Pass service cost. Service cost is how much? 2.1. So you have what? Service cost. It's what? 2,100. Is that not the case? Okay, what item again? Can you see there? Pension plan pay to retired members. So we'll deal with this one. You take note of this 500. We will deal with that one later. Then let us come to contribution 1.9. Where will it go?
Assets.
Contribution paid. Okay. So that one is 1,900. What again, please?
I'll put it as assets.
What again? What again? Okay, now let's come here. There is improvement in the payment of it. So that's what past service cost. And they said it's how much? 2 million, right? Okay. So yeah, first past service what? Cost 2 million. So that one is what? 2,000. Is that not the case? Okay. So we are done. So these are the items that you present in your workings. Have patience. There's one item that we didn't include.
The benefit.
The benefit paid. Oh, if in your case, whenever you see it, you just bring it, okay? If not, you will forget, right?
Okay.
So here it says how much? Benefits paid. How much? 500. Okay, you put it in bracket. 500,000. You put it in bracket. Okay, so please sum them up. Let's go.
$10,092.
Okay, so let's look at their closing balances. How much? How much for the asset? Asset is how much? Check. The closing balance, they've given it to you. Is a plan asset is what? 10.2. Okay. So here is what? 10,200. The closing balance for liability is also 12.5. Okay.
5.
Now you ask yourself, asset, is it what? Gain or loss? So that you have what? Remeasurement what? Component. Gain or loss, they expected to what? To have 10,092, but they had 10,200. Is it gain or loss?
It's a gain.
It's a gain of how much?
10.
So you can choose what?
108.
Yes, you can choose to put it in. You can choose to what? Leave it like this, or you can choose to what? To write what? Gain beside it. Now, when you come to liability, is it gain or loss? Look at it from the surface. Is it gain? You expected to what? Waste 12,610, but we wasted 12,500. Is it gain or loss?
It's a gain.
It's a gain of how much? Okay, so we are done. So when you are done there, you come and what? Extract your what? Your remeasurement component. You add the two together. So you have what? 108 plus what? 110. What do you have? 218. Then closing balance. When you look at the closing balance for asset and closing balance for liability, liability is what? It's more than the asset. So you'll have what? Pension liability. Which will give you what? 12 minus 10, 200. Okay, so what do you have here? You have 12, 500 minus 10, 200. That gives you what? 2,000. Profit and loss extract. Okay, so you will have your what? Net interest. right? So you'll have your what? Your investment returns. You have your what? Your interest expense. Okay, now your investment returns is how much? 492. And your what? Your so that one is what? 510. So when you less it, what do we have? 492 minus what? 510. That gives you what? 18 in bracket.
18.
Now, when you are done there, you do your what?
18.
You have your what? Your past service cost, and you have your what? Your service cost or your current service cost. How much are they? Your past service cost is 2,000 into brackets, and then your current service cost is also how much? 2,100 also into brackets. So that is it about this. Then you work out for what? Your other comprehensive income. Your other comprehensive income. Okay, so your other comprehensive income OCI, or you do your remeasurement what component. The remeasurement component is how much? As we added 200 and what? 18 positive. So when we are done, then we do your what? Our statement of what? Financial position extract. So that one too, we will have our what? Our pension liability. Our pension liability are calculated is from 2,300. Then we have our what? Our equity. So under our equity, we have what? Our other reserve, where we will have what? Our remeasurement component, which is what? 218. Thank you very much about this question. Okay, we are done with this one. I projected a question. The question is what? Oboisa PLC operate a defined benefit pension plan for employees who commence employment with what? With the company prior to 1st April 2021. The pension scheme is what? Non-contributory. At 31st March 2023, the group recorded a net defined liability of what? 151. Have you seen that? They said that at the end of 2023, the group recorded a net defined liability of what? 157 million. You understand? So this one is what? Previous accounting that they recorded, it was pension liability. Okay. The following information relates to 2024. They had a contribution of 43, benefit paid, current service cost, curtailment gain, present value of defined obligation. They also did what? Value of plan assets. This. So what you've seen here, they are what? They are closing balances. So closing balance for what? Pension liability is 498. And then what? Closing balance of pension asset is what? 315. Then they told you that the average yield on what? On relevant corporate bond is 20%. So this is how much would they, when they invested the money, this is how much they are going to get. So entry so far made with those employment have been to incorrect debit account receivables and credit payable. Benefit paid have been correctly recorded. Have you seen the nature of this question? So if you are not careful, it will throw you away. That this one you cannot what? You cannot use the double method to do this one. So you have to use a single format, as I taught you. You remember? Okay, you can use the single format to do this one as well. So here, have you seen that they said they recorded what? Defined liability from previous accounting year, which is 159. So the rest of the information pertains what? To the what? It pertains to the current pension liability items, except what? Contributions. And I taught you how to what? How to make the entry to this. Are we okay?
Yes, sir.
Good.
In line with IAS 19, employee benefit, determine how much pension amount should be included in a financial statement of Oboisa for the year ended 31st March 2024. Show the appropriate extract for the above and any correction entry if necessary. Oboisa PLC, Oboisa operates a defined benefit pension plan.
So clearly in the question, they want you to what? Use only single, which is pension liability alone, to determine the what? To determine the values for them. So here you start with what? Your pension what? liability. So in the question, they've already given it to you. So you have a what? Your opening what? Balance. How much is the opening balance as given in the question? The opening balance is how much?
157.
Thank you very much. So they gives you 157. So you have your what? You have your what? Your interest expense, which they've given in the question as for 20%. Have you seen that? So you calculate
Yes,
20% on 157. How much do you have?
31.4.
So 31.4. Okay.
4.
Now in the question they gave you what? Service cost, right? They are there. You have what? Current service cost. How much?
Current service cost is 16.
Okay, 16. Do you have power service cost?
No.
You don't have power service cost.
We have curtailment.
Okay, there's no power service cost. Okay, that's fine.
Curtailment. Benefit paid.
So curtailment. Curtailment. Is it negative curtailment or positive curtailment? Check.
Gain. Gain.
Gain. So gain, that's also curtailment. Into bracket gain. So if it is a gain, what did I say you will do?
You put it in a bracket
Thank
because
you
it's a
very
liability.
much. How much?
3.
3. Now, what can you see?
We have benefit paid.
Good. I told you the benefit paid when we are doing single benefit day doesn't come, but what comes rather? Contribution.
Pushing. But we don't. Okay.
Contribution is how much?
We don't have contribution.
Check the first question. Check the first question. The first line, employer contribution paid. Above, employer contribution paid.
Okay. 43.
43. And I say you do it, you put it in brackets. That's all.
Bracket.
You add them. What do you have? Please, service cost. Current service cost is how much, please? Check the current service cost. I think there's a problem with current service cost. Check current service cost is how much?
Current service cost 42. The 16 is the benefit.
Current service cost is what? 42. So you add it. What do you have? So this gives you what? Expected what?
184.4.
184.4. So this gives you expected what? Fair value what? Liability. Okay. Then you come here, you will have your what? Your closing balance. Now your closing, they're giving you closing balance asset and closing balance liability. Check it. Please, have you seen closing balance asset, closing balance liability? Closing balance asset, closing balance liability. How much have you seen it?
315.
Okay, so the closing balance for liability is how much? 498 minus 315 of what? Of assets. So when you less, what do you have?
183.
183. Okay, so now is it asset? Is it gain or loss? So remeasurement components. Is it gain or loss? You expected to what? Spend 184, but you ended up spending 183. Is it gain or loss?
Again.
Okay, the difference how much?
1.4, sir.
Gain. Okay, so that's all. So when you are done, then you consult your what? Your profit and loss profit. So now you have your what? So now you know your remeasurement what component to be how much? 1.4. And you know your what? Pension liability to what? 183 as you have it. So you can now consult your what? Your profit and what? And loss extracts. Okay, so you have it here. So what comes here first? So you have your what? Your interest expense. How much?
314.
Then you have your what? You have your what? Your current service cost.
42.
Then you have what again? You have your what? So all of them will be in bracket too, right?
Yes.
You have your what? You have your curtailment. How much?
3 in a bracket.
You open bracket. Okay, that's all. So you go to your what? Your OCI. You also have your what? Your remeasurement component. As we calculated, so how much?
1.4.
1.4. Then you do your what? You do your what? Your statement of what? Financial position or extracts. Okay, so that one too, you have your what? Your pension liability, which is how much? 183. Then you have your what? Your equity. Where you have your
Also,
what? Your remeasurement component, which is how much? 1.4. All right. So that is it about IAS 19. Have you seen this question? This one, the Zuma Limited.
yes.
We can use this single format, this one, to solve it as well.
Okay.
Yes. You can do it. Go and try it yourself.
Okay.
It will give you the same results.
Okay.
Okay. So I think we are done for the evening. Thank you very much.